How important is it for someone as they're going through this journey to have tax planning at the forefront of their mind, right? As they're building their business or setting up LLCs, right? Different strategies that can be set up early on. How important is it for people to start learning this game so they can capture the benefits over their lifetime?
That's a great question, Brock, because I think when we're going through the game of like education, when you're coming out of college, and you want to start a business, you're so used to just using whether it's TurboTax or H&R Block, or the biggest one that I hear all the time. It's my dad's like CPA, he's a little bit older, doesn't know what they're doing. And when people don't realize that there's a difference between tax preparer and a tax consultant. So a tax preparer is an H&R Block. It's the people that you bring your documents to and they prepare your return, right? They're not giving you any advice on how to play the game. A tax consultant is going to look at your overall financial status and your business and what are your goals and determine what can we do to play the game. And I always tell people that the wealthy make the rules for themselves. Unfortunately, they don't make it as much as they want to tell you that they do, they don't. They do it for themselves because they're wealthy, they're business owners, they're real estate investors. So what are they going to do to play the game? But they're not going to teach us how to do it because then everybody would do it, right? So it's like the rules are there. You just need to find someone on your side. So for business owners who are just starting, it is a big investment when you go from a TurboTax that charges you $150 to having a tax consultant that I can tell you is 10x that amount. So you have to, as a business owner, you have to look at if you paid Bob down the road $300 to do your taxes, but you overpaid in taxes by $60,000, you really ended up paying $60,300, right? So instead of investing with someone who already had the knowledge. So as a beginning business owner, wealth builder, you have to change your mindset that a CPA is not an expense, but it's actually an investment that's going to help you play the game.
It's a paradigm shift.
Well, that's actually a really good question. Where Jeff and I were talking about this the other day. We probably need to talk offline about this more too. So there's a tax preparer, right? So like I use myself as an example. I have an accountant that does my taxes at the end of the year. She's great, right? I also have a financial advisor. We both use the same one, right? So he's been helping us with different things, but also using a tax consultant, right? Your business. That's something that would get in there. You'd use that as well as a tool, right? It's kind of three different roles almost, right? Or strategies you implement, because the tax preparer is going to put everything together at the end of the year, right? But not necessarily talking to you quarterly, coming up with plans of things you should be doing. Because by the end, when the year is over, right, a lot of those opportunities are probably gone. So is that a good sum up of kind of what the differences are?
Yeah. And I think the biggest thing I always say, like the biggest thing what I hear, because it's true, when new leads come and talk to us, they'll always complain that their tax preparer they weren't there giving me all this advice. And the first thing I ask them is like, how much are they charging you? Right. Because I'm like, are they charging you? Because I think money, it's the biggest elephant in the room, right? So it's like, I'm straight front, like, this is how much it's going to cost you. Do you want it? Yes or no? Because you need to know that. So when a client say, oh, well, Bob didn't tell me about the mileage or the cost segregation. It's like, all right, well, are you only seeing Bob on February 15th? Okay, well, that's the problem because Bob's a tax preparer. He's not giving you advice prior. You should be talking to your CPA all year round because things can change. You can sell a property, buy a property right now. Don't sell anything because if you sell something, it's November 14th. If you sell something now, you will have April 15th. That's when those taxes are due if you generate a gain. So there's so much tax planning. So there is a difference between getting your taxes prepared. There's very little things that you can do in April 15th for the prior year versus if you're talking to your CPA all year round. Hey guys, are you selling, your warehouse? Are you 1031ing it? Are you buying a car? Like all those fun strategies that we talk about need to be done prior to 1231.
Just did all the above. So how many in your business then? How often do you meet with your clients throughout the year? Is it like a set? Hey, we're going to talk quarterly and run through like sort of a quarterly business review, or how is that structured?
Yeah, so we have different plans because I think we're a very boutique CPA firm because everybody is at a different stage in their wealth building, right? So we have clients who are just starting off and we only talk to them once a year. So our minimum is once a year, no matter what. Or we have quarterly. So depending on the size of your business, the size of your portfolio, the hand holding that you need. We have clients who have 2 properties and say, we want to talk to you every quarter, or your staff. So it really depends on what your needs are, and if it's a good fit for us. So minimum once a year.
Hey, how about, side note too, how about someone that just bought what's the car write-off? If you have a heavy car, I just bought one yesterday, so.
Ooh, what'd you buy? Tell me. I love cars.
A Range Rover.
Oh, well, who wants to love having that in the shop? But if you want to be like
I
other
should say
people
something like
that
that.
have Range Rovers,
I am gonna have some maintenance challenges. Damn it! But anyway, so I'm really pumped about it. I like it a lot. How do I? What's the? I know this. We're not talking about real estate right now, but like, what's the? It's like over 6,000 pounds
Yeah.
or something.
so if you have a legitimate side business, which real estate is a business, you have the ability to write off your cars. Okay. There's 2 ways to do it. And the best way that we talk about all the time is when you see like the G-Wagons, the Teslas, the Range Rovers, the Porsches. As long as it's over 6,000 pounds, and it's not 6,000 pounds, you can Google on the you can Google the oh my gosh, I can't say that word. The pounds of if your car is actually, if it weighs that pounds.
Yeah.
When you do that, if it's over 6,000 pounds and you use it over 50% for business, you're able to take an 80% deduction this year. So that's really nice. If you buy a $100,000 car, you'll be able to write off an $80,000 write-off this year. You don't have to buy it cash. You don't have to buy a brand new. It has to just be new to you. So the problem here is that you should have bought that last year. Last year was 100%.
Shit.
This year you'll still get 80, but then next year it's 60, and then it continues to go down 20% every single year. I always say this because it's like my thing to say, but unless like Congress does something about it, we're stuck with nothing. But we don't have to worry about that yet.
Okay.
What if your car's less than 6,000 pounds? You get nothing, or small.
If your car is less than 6,000 pounds, you still get a deduction, but the maximum is, I think this year is 22,000. So if your car is 100K and it's not over 6,000 pounds, your maximum will be 22,000 this year.
Like leasing versus buying, right? So if you're leasing, you don't get those benefits though.
That is correct. You cannot lease a car. A leased car vehicle is not going to qualify for depreciation. It just has to be one that you actually buy.
Got it. Okay.
Sucks to suck.